I'm here today with Simon Brazier, Elite Rated Manager by Fund Calibre of the Investec UK Alpha Fund. Simon, what is the objective of the fund and how do you manage the fund to meet those objectives?
The objective of the fund is to outperform the FTSE All-Share by 3 to 5% per annum over a 3 to 5 year view. What we're very clear of is we try to give consistent returns for clients. So it's a diversified portfolio, 50 to 90 stocks. We just try to buy great businesses that have 4 characteristics. 1, a very good business model, a company that can grow its profits over time, a financial model that turns those profits into cash flow, and then the most important area for us is what do companies do with that cash flow? How do they reinvest it? The 4th factor is valuation, which is somewhat determined by the market, but it's all very well being a great company, but sometimes they can be overpriced, so one has to be wary about valuation.
What is your view of the UK and UK equities today?
One can't escape the fact that the UK is part of the global economy, and the reality for us is that things are relatively tricky. Developed markets, developed economies are slowing as there's too much debt in the world, and developing markets are also seeing lower growth. Having said that, actually the UK economy is in relatively fine fettle. You're seeing 2 to 3% GDP growth, falling unemployment, low inflation, low interest rates, with a government that's committed to reducing the budget deficit. For us, that is a positive thing for UK companies.
And sort of within the broad UK equity market, where are you seeing the best opportunities?
Yes, what one has to be clear of in this current market, which is quite volatile, is to find companies on a longer term view that can deliver performance. And so for us, that's finding companies that can grow in a low growth world. So Group 4 Securical, most people know them, they do man guarding, they do cash solutions, growing 5 to 8% per annum across the world. Or also looking at domestic UK stocks. As I said, the UK economy is in good health. So Lloyds, for example, is a big position for me, one of the UK banking stocks that looks relatively well positioned from here. And finally, it's finding companies that can reinvest cash flow at good rates of return. So Booker is a UK food wholesale business that's recently reinvested in buying the Budgens and Londis stores. But there is one other factor which overlies this, which is we are finding opportunities in larger companies as well. About 75% of the portfolio is in larger companies. And so the companies such as BT still remain a large part of the portfolio. And for us, very well positioned to continue to grow, even in a more difficult global environment.
Thank you, Simon.
Not at all.